Bonds, government bonds, down, prices are down, yields are down, no value. And importantly, and I spent, it was 2 o'clock in the morning, I was having a discussion with a fund manager in the UK about the value of bonds, government bonds in a portfolio, and he was waxing lyrical that they were a diversifier versus equities. Well, anyone that's watched the RDA presentation and have been in bonds for more than 5 seconds knows that the lower the cushion, the lower the yield, the less negative correlation bonds will deliver in a volatile market. And I'm going to show you that with a bit of maths. I know everyone can't wait, but you can see Professor Jackson there again. So government bonds, so those people, I've been blatant before, this is going to be more blatant. People who have large tracts of PIMCO, Vanguard index bonds in their portfolio, they probably should give me a call, and they probably should be thinking really seriously about the losses they are currently incurring. So I've predicted they would incur it. I'm now telling you, you are incurring it, and your clients are going to be extremely unhappy, because on a 0.56 running yield and a negative capital, you probably are not going to be popular at your next review. Central bank balance sheets on the right-hand side. Money's cheap. The last AOFM, Australian Office of Financial Management, for 10-year government bonds, Australian, was 1.25%. And you can see central banks expanding their balance sheets there on the right-hand side. And one of the things you need to think about, or you should think about, is why is the Australian government doing it? The Australian economy is going pretty well. Why are they expanding the balance sheet? And the answer is to suppress the dollar to the best of their ability. They are actively quantitatively easing, and they're going to continue doing it. So we're going to print more government bonds at low prices, hopefully to drive our dollar down, because we're matching the Europeans and the Americans, because we don't want to see the Aussie dollar float into $1.08 US as it did during the global financial crisis. And how do we know that? We know it because Dr. Lowe has told us, and he runs the Reserve Bank. US debt issue. On the left-hand side, or US debt, but the US debt, the issues around US debt, students aren't going delinquent as often as they should. Obviously all those marijuana shops have shut up or something, but they're doing okay. But generally, if you have a look across that chart, you'll see that delinquencies are lower or remaining lower. Credit card up a bit, but nevertheless on a trend, they're not too bad. So we're not seeing mass delinquencies in the private debt markets at this point. What we are seeing on the right-hand side is security spreads are coming in. So for those people who were investors in things like Bentham in March, April, they probably made total returns of double digits. The Ardea guys are going really well, but spreads are coming in. And spreads on high yield, we're not a fan of high yield at the moment. A lot of money flowing in there. We think there's probably better value in syndicated loans, which we do have a position in.